With the glass ceiling broken, all the oppressed groups shall prosper, especially the most oppressed group of all.
Day traders.
But let's see. Still holding under ES 6148. Just didn't move on the entire day at all. Completely flat. Everything back to where we opened. Literally 0% on the day. Dollars continuing to decline, now at 97.69, alongside a moderate decline in yields, mostly in the belly of the curve. Not too much at the top end. And those are actually up higher earlier. We're still seeing a lot of risk on in BTC. Correlation continued to fall, not quite at new lows for 1 month correlation, but 3 month correlation is dropping pretty rapidly. So definitely some levering up and dispersion out into the next season of earnings. A little bounce back in commodities after 2 days of stupendous downside, largely due to a rebound in oil and precious metals. We got leverage peaking at about the middle of the day, falling into the end. Leverage on the short end of the carry falling as well. We're continuing to get upside move in the bond curve, which is a little counterintuitive given the continued drop in the forward yield on volatility. There's clearly a lot of arbitrage there. I would imagine someone's going to want to take advantage of it at some point, which could be a more violent move in the VIX. Bond volatility is still very low. Skew, I think it was kind of flat day over day. Yeah, skew is pretty flat day over day. It moved up a tiny bit, but not much. Breadth yesterday rose with the bounce back from the morning lows, or well, from Monday, I guess, is a little more accurate. But we have stocks over their 50 and 20-day moving averages moving up very quickly. Stocks over their 200-day moving average still sub 50%, and this is for the S&P. Yeah, I mean, kind of narrowing of breadth again, which is what we had like back on June 10th. We'll see if the 200-day moving average keeps up, but like today, Dow and Russell down, ES flat, NQ again, the only recipient of any significant improvements. This is now the 5th consecutive day of a rise in correlation, despite volatility being down. We're continuing to see correlation between cash VIX and VIX increase, now at 94.07%, and nearing the higher levels for the year. This may have something to do with that arbitrage we were looking at earlier on the forward yield. Fed fund futures priced up the June 2026 cuts to almost 4, just shy of 4 cuts. September of this year now priced up to 0.16, and Jan at 0.65. Bear steepener picked up, now back above 50, so the chances of recession are rising slightly. And then out here on the 1 day, we got a new high, but we didn't hold it. We did break above the 60.99 resistance, but failed it once again. This does open room, this is second test and failure of the 60.99 level. I still think there's probably room for a pullback and see if 60.31 will act as a support. It still hasn't, but I think a failure at the 6100 test would probably see us at least pull back that far, maybe further. A loss of 60.31 would be a little bit more significant. But right now, yeah, I would say maybe the back half of this week, so tomorrow or Friday, have a moderate chance of seeing a bit of a pullback, and maybe we fill that downside gap out. This is also forming a rising head and shoulders here on the daily. The neckline would could be down at like 57, 67. But yeah, weakness into the back half of this week would be probably quite damaging, and we can kind of expect a little bit of that, because if we look at like overnight repo's still growing pretty rapidly. I think we're maintaining higher levels anyway, but we'll probably see repo spike like before the end of the month, so maybe into Friday, and that could prompt a broader sell-off, profit taking, as funds get prepared to deleverage for their margin statements at the end of the month, end of quarter, actually. And so, you know, as more and more money gets pumped into overnight repo, you know, there's going to be less margin to carry positions, which might be one of the other reasons we're seeing like short puts pulling back over the last few days, despite the move up and what should be relatively bullish situation. I don't know if I'm bearish for GDP. I mean, it's just the third revision, so it's not going to be super impactful unless it's way off from the prior value. What's the likelihood of a pullback in the next year or 2 or 10? I feel like we'll probably get pullbacks, several of them, over the next year or 2 or 10. Anyway, thank you guys for tuning in. I will see you bright and early tomorrow. Have a good night, everyone. Later.